plan for, have you ever thought of what life might look like if you weren't there to provide for your child? Really think about that for a second. Who would take care of your kids, your wife? Would they have to move out of your home because they can't afford it? Would your kids have to change schools because you didn't plan for the unexpected? Would your wife need to get a second job and never see your kids because she was working to make ends meet? How would that affect your family? In less than 5 minutes, you could have a quote and start the process of getting your family the most important protection that you could plan for them. It's the most loving and responsible thing that you can do to plan for the unexpected. Don't wait. Now's your moment.
Hey, thank you guys so much for hopping on today. My name is Brenda Dunville, and my phone number and email are right there. I encourage you guys send me a text throughout and a screenshot if you would like to. This is my reason why I am sharing this today. You'll see my son, Mikey, and he is my pride and joy. I'm a single mama, sole provider, and so I am going to share real life examples of how I created a very successful future for him with illustrations and real time. So I'm Brenda Dunville. So three main things that I do. I am an independent agent, so I do help people with life insurance. I help people with term life insurance. You can grab a free quote there at the link. But all in all, I can help people save normally around 30 to 50% off of their term insurance because I am that independent agent that can reach out to over 200 different carriers and find the best fit for you. So if that's something you're looking for, that is something that I do. I also help people with their whole life, just like this infinite banking or family banking. There's a lot of different names for it, but I really help people focus on the wealth creation aspect of life insurance and to know how to grow their tax-free cash value in the very expensive world that we live in. Not really knowing what's going to happen with taxes, it's a really great way to have a bucket of tax-free growth. And then also, I help people with retirement upgrades, removing hidden fees, removing market volatility, and just the fear of loss with your money. So everything that we do is a safe money play. Everything that I provide for people, I ensure that all their money will always grow. So they'll see growth, but never any loss. And that's a little bit about me. That's what I do. So would you consider purchasing life insurance for your children? Some people are absolutely, some people say, no, I don't know if I need to do that. And some people are just unsure. So we're going to go over a little bit about this. And this might be for just you. You want to know about infinite banking for yourself. Maybe you were interested in what does that look like for my children. We'll show examples so you can really put it in the pocket of what it is that you want. If it's maybe you're single and you want to see what this looks like just for you, that's totally fine too. And we can talk about that as well. There's 10 secret things you may not know about infinite banking or family private banking, whatever you want to call it. But one, it can relieve and eliminate the pressure and stress that you feel from being in debt. Two, infinite banking allows you to get a guaranteed return on your money. Three, it can put you in a position to always be able to take advantage of opportunities as they come your way. You can get an infinite banking policy for your child and guarantee that they will be millionaires at a young age. Infinite banking is a solution for finance, maybe for your car. Stop making the banks rich on your interest and you can keep it in your own pocket. Infinite banking and real estate are like peanut butter and jelly. Imagine being a bank on your real estate deal. Infinite banking will relieve stress because you'll have peace of mind and control over your finances. Infinite banking for business owners is the holy grail of business and building a business. You'll weather any storm that comes your way. A 30-year mortgage coupled with infinite banking strategy is better than a 15-year mortgage. Infinite banking has been used by the ultra wealthy families for years, like Walt Disney and the Rockefellers. So these secrets that you should know in detail, why they are lesser known and even kept secrets by the mainstream financial institutions. So let's see how this all works. So how does it work? So you personally need to have life insurance, even if it's just term, so that you can insure your child with insurable interest. So here's an example from my friend and colleague Tyrone. He's going to show you an example of a 6-year-old millionaire strategy.
Check out what parents are doing now to save for their child's retirement and set them up later in life to be millionaires. Take a look at the numbers and see how it plays out. Certainly, I just helped a client getting a gift from her grandmother, and that gift was going to be $20,000. So you can see here, there's a $20,000 gift that's into this specifically designed life insurance contract. This particular one is what's called a whole life policy, and it's designed for cash value. So the 95% of these funds up here are going into the cash value portion of this policy. So after those 20,000 have gone in over those first 2 years, then the mom is going to be contributing about $2,700 per year, about $230 per month. When the child, this is a 6-year-old, when the child is 18, she's going to have $55,000 of cash value. This cash value that's built up into the policy, and this 18-year-old will have a death benefit of $685,000. So later in life, when the child is, when she's starting a family, she's going to have a death benefit that's just shy of $820,000, and she's going to have cash of about $141,000 inside of her policy that she can access tax-free. That's super huge. That could be a family car, that could be a down payment on their house, that could be investing in a rental property for the family. In several ways that could look. But let's take a look at what it looks like for retirement for this child. So 65 years old, $1 million, for $1 million tax-free access money. And we have a death benefit for her that's $1.6 million, huge. There's another really cool feature about these policies that you don't get in a retirement account. This went from a college savings plan to a family protection plan to now a retirement account for this year old. Really cool feature that's called Care for Life. It's Care for Life. Okay. Care for Life is actually living insurance. Inside of Care for Life, that allows the insured to access the death benefit while they're alive. So if there's a terminal, chronic, or critical illness, they're actually going to pay out 75% of the death benefit, which is always the bigger number here. 75% of the death benefit, 50%, 25%, depending on what the sickness or the illness or the condition is. Look at true financial planning. What this does, it allows the family to have good risk management and allows the financial plans and goals of the family to continue all through life, all the way through the later years of this child's life. Because if she has a qualifying medical event, whether it's tomorrow or when she's 90, this allows her to get this lump sum of money that comes into her financial plan to help the plans of the family continue. That's super powerful, okay? Dealt with a medical event, it's very nice to not have to think about your finances or how you're going to get money for your family to pay your bills, because they're going to have this lump sum of money that comes in. This is the new way that parents are planning for college for their kids.
So what opportunity does this give you if set up correctly? It's unlimited creativity and flexibility, which we will talk about more. Access your money tax-free. You have complete liquidity. It grows tax-free. It's 4.5% to 5.5% tax-free growth for life. And you have that growing death benefit for life as well. So 90% of whole life policies are not set up correctly for infinite banking or tax-free growth, unfortunately. And I've helped a lot of people fix policies or, set up a new policy so that they can have this. This is definitely something that I can look at. If you guys have a whole life policy and you're not sure, just reach out. We can see what it looks like for you and if anything needs to be adjusted or replaced. So government requirements to keep it non-taxable. So first off, the government doesn't like us growing our money tax free. So there are some things that we obviously work around a little bit. And once the MEC level, it's a modified endowment contract. So that is something that I will make sure that we have set up for you. And that just means that you need to have a level of death benefit to match your cash value correctly so that it's an insurance, not an investment, because if it is not set up with the MEC level, they can tax it. So we'll make sure that that is not the case for you when you get this started. And the second is reduced paid up. So that just means you need to pay premiums for a minimum of 7 years. You can pay more and put more into it, but it's a minimum of 7 years for the government to let us do this. So 3 variables that you want to think about while we look into this. 1, how much do you want to pay for premiums? 2, how long do you want to pay premiums for? And 3, do you want to have an initial premium, like a supercharge for your account? So this is my son, Mikey, as you know, and you have to do things different to get different. This is words that I heard from my mentor for years. So when I saw a strategy that could guarantee that Mikey could be a millionaire in his young life, I knew that as a single mom, I needed to do this for him. So I implemented one simple strategy, and I'm going to share the illustration of his illustration with you. And I set it up for my son, and it's affordable for a solo parent budget. It's such an easy and effective way to ensure stability and peace of mind for me, knowing that I'm going to pass on just a really great legacy for him, but also I'm going to pass on an extremely stable death benefit for my grandkids, even if I'm not around to see it. So let's look at my personal infinite banking for my son as a real life example. Okay, so I decided, and you can have multiple of these, but this is my first whole life policy for him. He's 2. I decided that I'm going to have $300 a month for 10 years of premium. So that was what I decided to do for this policy. So this is what it looks like. This is the illustration for his actual account. So over the course of 10 years, I'm putting $300 a month, which is $3,600 annually. And by the end of the 10 years, it'll be $36,000. Let's face it, that's a very, very cheap car. I could put this in a bank account and he could get a very, very cheap car. Or I could do something like this and change his life. The really cool thing too is this is actually my policy because I'm the owner of it. So if I ever want to take a loan out of my cash value, I can, and it will continue to grow. So it's complete liquidity. If I have something, I have an opportunity and I want to, take a loan out on myself, the interest continues to grow. So that's beautiful. But look at this here. Okay, so after the year 10, because that's what I decided to do, year 11, the premium went to 0. So that's reduced paid up. So what happens is now I've got this cash value after 10 years of almost 40,000. Well, they say, how much could $39,841 secure for a death benefit? So they adjust it down to what can this stabilize this death benefit for, and it continues to grow. So you'll see 4.5 to 5.5% growth here in my cash value forever. You'll see about 2.5% growth in the death benefit forever. Okay. So that's all adjusted. Now let's look at this, right? So right now he's 13 years old. All right, well, what happens when he's 33 years old? I still have never paid another penny. I've only put 36,000 into this policy. He's 33 years old, and now the cash value is $109,989. It continued to grow. Isn't that a beautiful thing? And the death benefit is now $410. So, or $410,000. All right, so let's look at this a little bit further. So here I am. Let's see. Maybe he wants to retire at 65. So what would this look like? Now that 36,000 that I put into it those years ago is now tax-free growth of $460,709 and a death benefit. Maybe he's got kids, $779,996. So let's look a little bit further. I'm thinking legacy, right? So unfortunately, the average year that people pass away, expire, is 85. So what happens? He put some new beneficiaries on there. Maybe my grandbabies are on there. They're left over $1 million. Or maybe he's still kicking and he wants to travel. He's got over $1 million of cash value that he can play with. And all I had to do was start it out with $36,000. Isn't that awesome, you guys? And it's all tax-free growth. It is just an incredible thing. Now, I was mentioning taking loans out, right, and doing things with it. So here is how you can recapture your money. So you've got money. You fund your policy, just like I did with the $300 a month. I funded the policy and I put it into a high cash value whole life policy. Now I might identify an opportunity, right? Maybe I want to get an Airbnb. Maybe I don't know, something that will grow another pocket of cash. I identify the opportunity. I borrow against my cash value. And maybe it's buy some real estate or get out of debt or buy dividends and pay stock, whatever you want to do. Some people have bought Turo cars, which then they recapture the money with whatever opportunity that they found, and they repeat the process. Maybe they're still funding that same policy, or maybe they get another policy, but it continues to grow. So now when you take out a loan, your entire cash value continues to compound, allowing you to make money in two places with the same dollar. Okay, so when Mikey shows me that he is responsible enough and I want to surrender that account to him, he can do the same thing with that cash that I started him off with. All right, so what's next here? I know you guys have questions. So what I want you guys to do is text me your full name. Here's my cell phone number. Text me your full name and what interests you. What do you want to learn more about? Maybe you just want to jump on a Zoom and really see an illustration of what it would look like for you. You know how much you want to put in monthly. You know how many years you want to do this for. What does this look like, right? So you most likely will have questions after learning about this. The next step would be to schedule a private, confidential online appointment with me so that we can go over options that could best suit you personally with your wants, your needs, your personal financial assets for your family. And I'm looking forward to helping serve you and your family with all of the safe money plays and helping to educate you further and get this set up correctly for you so that you, when you're ready to grow your tax-free cash value for you and your entire family, I am here. This is such an incredible play. And I feel like everybody needs to know what this could look like for them. So thank you guys for learning a little bit more about infinite banking. And coming up, we do have something coming up that's very exciting. We're going to be talking about tax-free retirement accounts. So I don't know if you've heard about that, but why hasn't your financial advisor shared it with you? Well, most traditional money guys don't know that this option exists, and they don't sometimes they may not know how to structure an account like this for legal tax-free growth, and their companies may not offer this solution. So in a typical 401k, you can't get access to your money until you are 39 and a half. Your money is exposed to market loss and you'll be taxed heavily in retirement. Okay, but with a TFRA, your money can be accessed early if needed, penalty free. Your money is safe from market losses and you'll legally pay zero taxes in retirement. So we're going to show you guys all about this. It's something that has been a strategy for the ultra wealthy for over 100 years now, and it's available to almost every single person. We're hosting an online event where we'll break down all the details of what this concept is and how it works. So when you factor in the taxes that you'll have to pay on your retirement accounts, how much of it do you really own? So we're going to show you guys how you can keep your money in your pocket. So building a tax-free retirement account, we have a free online event. So just join us and learn how to legally grow your money tax-free. And the link is right here. You can also text me and I'll send you all the details, but it is going to be on the 13th in just a few days at 8 p.m. Eastern. So with that, you guys, thank you so, so much for joining us today. And I will talk with you guys soon. If you have any questions, just reach out. All right. God bless you guys. Have an amazing day.